While no one expected such a lucrative 2023, with the S&P climbing by over 20% by the year's end after chasing the tech-heavy NASDAQ, which ultimately soared by a whopping 36+%, the healthcare sector was one sector that totally missed the mark. And right now, there are plenty of opportunities in the healthcare sector for all of us longer-term investors, 3 of which I'm going to go ahead and break down for you today. So with that, let's dive right in. Now, before I cover these 3 healthcare gems, I want you to familiarize yourself, at least at a macro level, with the lay of the land within the healthcare industry, because it's important for you to note that after 2022, or really after that COVID vaccine race came to its end, healthcare stocks were chucked to the side, and that made for quite a depressing 2023, which the entire sector really experienced a COVID-19 hangover, if you will. I mean, revenues across the board for healthcare companies experienced sharp declines. Now, that all makes sense given diagnostic testing and medical tool purchases all plummeted, and moreover, just depending on the company, excessive inventories burdened company management teams and spooked away investors. But I think the ultimate decelerator was the growth thirst quench, whereas tech was just on the rise, and the bulls really came out to rally, leaving boring old healthcare stocks in the dust. And right now, valuations of many of these healthcare companies are actually looking beautifully low, which gives way to opportunity for all of us. But we have to act fast, because I do think we are in for rationalization within the healthcare industry, and soon. Now, according to a Janus Henderson report, the Fed's rate tightening cycle could be very beneficial to biotechs, as they have found that biotechs tend to outperform during these periods of time. But now let's go ahead and break down these 3 healthcare picks. First up, the most obvious, Pfizer, ticker symbol PFE, which is a pharmaceutical behemoth that was our vaccine champion, yet was hit the hardest thereafter winning the vaccine race, as we watched the share price falter by over 26% from the highs of nearly $50 per share to now a measly $29 per share, with a PE ratio at 16.2. But zooming out here, we see that it delivered through on almost 50% worth of appreciation over the last decade, and as a world leader in big pharma, this is all a buying opportunity at the right price. Now, analysts foresee 10% worth of upside, coming up to $32.67 per share, but I'm more excited to see insider buying here at the director level, as well as hedge fund activity, whereas hedge funds have been purchasing over 619,000 shares last quarter when the stock was at some higher highs, to which now I believe it's actually come down to a true bottom. But as a dividend investor, we're talking about your ability to reap the benefits of the Pfizer dividend, coming in at a 5.7% yield, which remains safe according to Simply Safe Dividends, while remaining on that 12-year dividend streak and growing all along the way on average by 6% over the last 20 years. Now, investors, before I cover the next 2 dividend stock picks, I want you to join me here in 2024 on this channel by subscribing to really level up as an investor, as it's my goal to help you crush your goals while I'm crushing mine. With that, let's go ahead and talk about a medtech titan that was absolutely leveled for the past few years, Medtronic, ticker symbol MDT, which solely focuses on medical technology and medical devices, and just experienced plenty of pain over the last few years, with sales dropping to some unthinkable levels, but all of which really makes sense in the economic environment we are living in, whether it was all from supply and demand shifts, inflation, or even for a long while supply chain troubles. Medtronic slid from the highs of $134 per share to just $84 per share, which is roughly 23% of a decline. But continue to think long-term with Medtronic. It's an industry leader, as we could see over 80% worth of appreciation over the last decade, and moreover, Medtronic's actually already climbing on the year. Now, analysts foresee a price coming up to $88.40 per share, but better yet, hedge funds have been going wild on this one, on that buy trigger, purchasing over 4.4 million shares of Medtronic last quarter. And as a shareholder myself, I'm only going to continue to hold this dividend whale, as it comes in with a 2.36% dividend yield, Simply Safe score here of a 99, over 45 years worth of a dividend streak, and most importantly here, 13% worth of dividend growth on average over the last 20 years. But then there's Bristol Myers Squibb, ticker symbol BMY, which is one that I've been touting over the last few weeks, as it stands as a dominant global biopharmaceutical company delivering through on innovative medicines for some of the world's most serious illnesses. Not to mention, it just remains one of the largest healthcare companies in the entire world, which should give you an added measure of comfort as an investor. But now check this out. When it comes to the share price, Bristol Myers is down by over 23%, trading for $52 per share with a PE ratio at 13.2. Now, can you even believe that? That means that for less than, say, a new pair pair of shoes, you can be an owner of this dividend healthcare juggernaut. In doing so, simply waiting, you're likely going to experience growth. After all, over a decade worth of growth here as it soared by over 26%, with analysts right now forecasting a share price to climb up to $60.45 per share. It's over 15% worth of upside. And here's what really gets me going in terms of positivity. The CEO himself scoring more shares of the company on top of hedge funds loading up on shares, adding over 2.2 million shares last quarter. Dividend insight wise, we have a dividend yield coming in at 4.6%. That's been on a dividend streak for over 52 years now. Nominal growth, but growth nonetheless. So investors, which will it be? Pfizer, Medtronic, or Bristol Myers Squibb? Comment down below to let me know your thoughts on each of them. Catch more insights in this video right here. But before you actually click away, subscribe to never miss a single dividend stock idea.